All right, so the G24, which is the intergovernmental group of 24 countries created to coordinate the position of developing countries on monetary and development issues, has been very busy and vocal since the beginning of the IMF World Bank meetings. We have John McCoy had a sit down with the head of Secretariat at G24, Dr. Iyabo Masha, to get the perspective of the group on the current issues and the ongoing meetings. Take a listen.
So this 2023 annual meetings is coming at a time when many countries are in deep economic crisis. There's a lot of fiscal imbalances, current account imbalances, high debt levels. So that has been the major motivation of some of the discussions we've had now. And so we have asked the global economic institutions to increase the financial liquidity available to countries through more IMF resources or more SDR allocation. And we also asked for reform of the governance of the IMF and also of the World Bank. We had some views on the debt resolution framework that is operational, and we are still in discussions on the way forward. So all in all, it has been a very interesting exercise, talking to all the leadership of the World Bank and the IMF and the interaction with our own G24 finance ministers and governors of central bank.
So you mentioned reform about like 2 times. That means it was a major request at this time. And I also hear a lot about we want more voice.
Absolutely.
So what does this mean?
Okay, in concrete terms, what it means is that for the IMF is a quota-based institution, and all members, all countries that are members have a share proportionate to the size of their economy in the world. Now, because countries' share of the world economy changes over time, then this quota is reviewed regularly. Now, there has not been a major review since 2010, and between 2010 and now, developing countries' share of global economy has risen considerably. So that is what we're fighting for. We want to see the quota allocation to be reviewed so that developing countries will have a stronger voice and a stronger say in the IMF. That's one of the issues relating to IMF governance. The third issue, which has been on the table for a very long time, is the call for the introduction of one more executive director to represent Sub-Saharan Africa. I believe that is already in the works. That is probably going to be one of the major outcomes of these annual meetings. But we're still in discussions on the quota review, and we do hope that it will reflect the size of members of the G24 in the global economy.
And the issue of debt cancellation also came up in the midst of all of these meetings, and the issue of the surcharge policy of IMF, as being a major contributor, or maybe not major, but a contributory factor to the increasing debt of emerging economies. What does the G24 see about this?
Well, that's a major concern to us because surcharges only apply to countries that take a lot of advances from the IMF. So a country's advances from the IMF must be a bit close to 200% of its quota before you start paying surcharge. So surcharge is something that is paid, a fee that is paid over and above the usual interest rates on outstanding balances. And the 5 out of 5 countries, the major that are the top 5 countries indebted to IMF, 4 of those countries are members of G24: Egypt, Ecuador, Argentina, and Ukraine is not a member. Ukraine is one of the topmost countries, and Pakistan. Collectively, these countries paid surcharge of close to $3 billion last year. So what we are saying is that with this surcharge, they are even going more and more into debt. And we call for IMF to either cancel the surcharge or modify it, or at least suspend it at a time of global economic uncertainties. And we don't have a solution yet. The IMF is undertaking a review of the surcharge. The position paper should be out before the end of this year, and that's when we expect to hear on this on the final decision.
Do we have a timeline?
Yes, by the end of this year, I believe the policy paper will be out, and we will hear what IMF has, what position it will take. Now, on the debt issue, what has happened is that there's a debt resolution framework, which some countries have already used. Ghana has used it, Zambia has used it, and Sri Lanka has also used it partially. But that framework does not provide substantial debt relief. So that's why we're calling for even more debt relief for countries. So for example, according to the latest IMF World Bank data, 61 countries are at serious risk of debt distress. And out of these 61 countries, some of them will qualify for the framework, for the G20 inclusive framework. But what they are going to get as haircuts or as restructuring is very low compared to the kind of crisis they are in. So that's also one discussion that is going on, that we want something much more durable than the ongoing G20 framework. And that's something that we put on the table, I would say. We have not reached a good point, I will say, on that issue, but it's something that we're going to be to continue pushing on and maybe retable during the next spring meetings.
But World Bank President believes that all of this is just temporal solution. The more long-term solution would be for Africans to look inwards, to explore their resources, trade in between or among each other, instead of always looking for help and debt cancellation.
Well, I mean, the point is that in order to trade, in order to grow domestic industries, you need financing. So, I mean, Ajay, the World Bank MD, will know that without building roads, infrastructure, investing in industries, investing in transportation, education, health, those require financing. It is only after you have the financing that then you can reap the benefits of that financing and start integrating with other countries. I agree that there's need to look inwards, but there's also need to provide financing.
And must we get financing from the Bretton Woods institutions? Is there any way Africa can do it by itself?
Yes, and that is by domestic revenue mobilization. I mean, it's not going to happen overnight, and the extent to which a country decides to completely use domestic revenue mobilization or get additional resources externally depends on, the policy framework of the country.